Hey everybody, welcome back. Rob Booker here. And yesterday we talked about support and resistance. Today we're going to talk about it again. Yesterday we talked about the basics, drawing the lines, getting them in place, and we're going to take it a step further. We're going to look at, I hope, what happens if a trend emerges. I think on the chart right here, we're about to see a trend emerge. It looks like things are consolidating, and that's going to lead to a burst of activity and a trend. But if not, we'll keep plugging away at the same principles and ideas that we talked about yesterday. This is part 2. This is a playlist. If you love what you're watching, it would mean the world to me if you would subscribe to the channel, like the page, leave a comment, and especially share this with a friend. Now, above or below this video, depending on where you are, there's a link to download a little booklet that's absolutely free, no opt-in required, no email required. It's absolutely free. You just click the link, you jump over, you download the book, and it's a nice little resource guide to accompany this video. I'm just trying to produce a ton of content that makes you happy and helps you become a better trader. Let's take a look at the charts here. So yesterday when we left off, we were looking at these support and resistance levels. And you can watch yesterday's video, which I will try to link to above or below, in order to remind you about how to draw these levels in the first place. We have this red level here. That was a particularly strong level that had been hit multiple times. And we're very interested in that level as a profit target. These other levels, we're interested in watching to see if price will break out above or below these levels. Remember, all trading is essentially the fact that price is either moving to a level from another level above or below. Okay, there we go. We broke down below the red level, which I like to use primarily as a profit target once it's in place. This red level was just a level that had been blown through multiple times, lots of different times, above and below, but like 5 or 6 times it stopped at that level. So there was a mix of it moving beyond the level or stopping at the level. And that means it's a great profit target. It's not as great as an entry level to use for getting into a trade because we've seen price move above and below it so many times. So it's not as reliable as a stopping point. Okay, look at that. This price jumps up here but doesn't break through this level. That makes this level even more important. If price does break above and close above, I got a lot of questions if I wait for price to close beyond the level, and I do. Absolutely yes. Just hitting that level is not going to be enough. Okay, look at this. Now I suspect that a trend is emerging, and this is a breakout below the level. And the reason I suspect that a trend is emerging is when you see price traveling in between a support and resistance level in what we call a consolidation period, and we then get a breakout beyond it, I think that leads to a trend. And I think you can actually expect that price is going to move in levels equal to the original consolidation zone. So I bet we can fill this level right here. And if we break out again, I bet we can fill this entire level down here. But the first thing we want to do is sell if price breaks below the level. We want to go ahead and sell when price has broken below that level and closed below or beyond that level. Okay, I'm super interested in that. So a sell trade here, we could put a stop loss just above a recent area of resistance up here. It doesn't have to be a tried and true giant level of support and resistance like this up here. It can just be a midterm area like a swing high or swing low. And we expect that price is going to drop all the way down to, which is exactly what it does, and stops. The candle body stops on that level. This is so simple and so basic. We drew this level right here in yesterday's video, and all it was hit twice. And that becomes a brilliant profit target. And we can just get out. And as you can see here, this profit right here is larger than the original stop loss. So we have basically 2 times profit for a 1-time stop, or a 2-to-1 reward to risk ratio, which is kind of what we really want to see on the chart. Now, once we've broken out lower like this, the last thing I want to mention on today's video is this looks like it is an emerging trend. because we've broken out of an area of consolidation and we've gone down, we want to favor all sell trades. So if price does eventually break above over here when we move forward, I'm not as interested in buying. Why? Because we had a period of consolidation, we broke lower, and now we want to look for sell trades. So I'm much more likely to look for another sell trade below this level and target this red area that we have than I am to do anything else. I'm going to be on the lookout for that. And there you go. That's the next phase is we got into a trade here. You could even, in examples like this that we looked at today, you could even take half of your profit off the table when we hit that profit target level and then leave the rest to run lower. I'm interested in your comments. I can't wait to see what you have to say about this. So leave a comment below the video here and let me know what you think. Let me know what your questions are. Like the video, leave a like, leave a comment. I'm always happy to hear from you. Somewhere on this page now, there's a picture of my face. Probably over here. You can subscribe to the channel if you haven't done already, and don't forget to click that bell to notify you of when I go live or when I post a new video. And then there should be another video to watch right here over to the side. Can't wait to see you again tomorrow. We'll continue this in part 3 and wrap up this short series on support and resistance trading. Love you all. Have the best day ever.